Want to know the top tax strategies for real estate investors in 2024? As we dive into the new year, it's time to equip ourselves with the knowledge to make the most of our investments. Navigating the world of real estate can be complex, but with the right tax strategies, we can turn complexity into opportunity. These strategies are not just about saving money, they're about maximizing your investment potential. Stay tuned as we unveil these top tax strategies that could save you a fortune. The first tax strategy on our list is the 1031 exchange. Now, what's this all about? Well, the 1031 exchange, named after its place in the Internal Revenue Code, is a strategy that allows real estate investors to defer capital gains taxes when they sell a property. Sounds interesting, right? Let's dive a little deeper. To utilize a 1031 exchange, you sell a property and then reinvest the proceeds in a new property. The catch? You need to identify the new property within 45 days and close the deal within 180 days from the sale of your old property. So, what's the benefit? Well, the magic of the 1031 exchange is that it allows you to defer paying capital gains tax on the sale. Instead of handing over a chunk of your profit to the taxman right away, you can reinvest it and let it grow. Now, it's important to remember that a 1031 exchange isn't a way to avoid taxes altogether. Eventually, when you sell your last property, you'll need to pay the deferred tax. But by then you may be in a lower tax bracket, or there may be other strategies to reduce your tax liability. The 1031 exchange can be complex and it's not for everyone. That's why it's vital to consult with a tax professional before making any decisions. They can help you understand the potential risks and benefits and determine if it's the right move for you. So, the 1031 exchange, a powerful tool for the savvy real estate investor. The next strategy is depreciation. Now, don't let the word depreciation scare you. It's simply an accounting term that recognizes the gradual wear and tear of an asset over time. In the real estate world, this asset is your property. So, how does this work as a tax strategy? Well, the Internal Revenue Service, or IRS, allows investors to deduct the cost of buying and improving an income property. This deduction is spread over what's called the useful life of the property, which is typically 27.5 years for residential property and 39 years for commercial. Here's the kicker. The beauty of depreciation is that it's a non-cash expense. This means you don't actually pay anything, yet you get to decrease your taxable income, effectively lowering your tax bill. It's like a magic trick, but one that's completely legal and above board. However, it's crucial to keep accurate records of your property's purchase price, the cost of any improvements, and the annual depreciation deductions. This way, you're prepared if the IRS ever wants to take a closer look. So, what's the long-term benefit? Well, depreciation acts like a shield, protecting your rental income from taxes. Over time, this can add up to significant savings, allowing you to reinvest and grow your real estate portfolio. Depreciation, not just a concept, but a significant tax-saving strategy. Our third strategy takes us to the opportunity zones. Picture this. Underprivileged areas of the country, ripe with potential, just waiting for the right investor to come along and breathe new life into them. That's the premise behind opportunity zones. Established by Congress in the Tax Cuts and Jobs Act of 2017, these zones are designed to spur economic development and job creation in distressed communities. They do this by offering tax incentives to investors willing to take the plunge. The benefits? Reduced tax liability on capital gains, with the potential for those gains to become tax-free if the investment is held for at least 10 years. Imagine putting your money to work in a way that not only grants you significant tax benefits but also aids in the revitalization of a community. It's an investment strategy that goes beyond mere financial gain, reaching into the realm of social impact. However, as with any investment, due diligence is key. Not all opportunity zones are created equal. It's therefore crucial to research and find zones that align with your investment goals, and to understand the specific requirements and regulations associated with these tax incentives. So think about it. By investing in an opportunity zone, you're not just building your wealth, you're also contributing to the betterment of a community. Opportunity zones, a win-win for both investors and the community. We've covered some powerful tax strategies today. Let's take a moment to recap. First, we looked at the 1031 exchange, a strategy that allows you to defer capital gains tax by reinvesting the proceeds from a sold property into a like-kind property. This strategy is a boon for investors looking to grow their property portfolio without a hefty tax bill. Next, we delved into the world of depreciation. Remember, this strategy lets you write off the cost of your property over time, reducing your taxable income. It's a slower burn, but it can significantly impact your tax bill in the long run. Lastly, we explored opportunity zones, a relatively new tax incentive that encourages investments in economically distressed areas. By investing in these zones, you can defer and potentially reduce your capital gains tax, and possibly even eliminate it on future gains if you hold the investment for at least 10 years. These strategies are specifically for the year 2024, and it's important to keep in mind that tax laws are continually evolving. Staying updated on these changes is crucial to maximize your tax benefits and protect your investments. Consulting with a tax professional can provide you with the most current and relevant advice tailored to your specific situation. Now I want to leave you with a thought. The world of real estate investing is filled with opportunities, but it's also fraught with complexities. It's a game that requires a deep understanding of the rules to play well. These tax strategies are just a part of the puzzle. To truly succeed, you must continually invest in your knowledge and stay ahead of the curve. And that brings us to the end of our journey today. Remember, the best investment is in knowledge. If you found this video helpful, please like, share, and subscribe for more content. And don't forget to comment below with your thoughts or questions. Until next time, happy investing.